The number of new listings hitting the market is soaring while the time it takes to sell them is falling like a rock. Hi, it's John Whelan and welcome back to my How's the Delray Beach Real Estate Market Update for October 2023. This month I've got a few things to talk about. Number one, supply dominates the narrative and it's rising. Number two, this affordability issue is getting worse. And number three, stick around to the end. I have a couple of bonus ideas I know you're going to find valuable. Let's get started. So let's jump right into the supply of things, one of my big topics for this year. Take a look at this first chart about Delray Beach. As you can see, it kind of hovered around 1,200 units, but then it bottomed in the month of August at 990 units, and since August, in the last 60 days, it's gone up to 1125, or a 13% rise in 2 months. Now take a look at this next chart. This next chart comes from my weekly e-letter that I publish every Wednesday. I mention it to you every month. If you have not subscribed, down below is a link to that weekly e-letter. I'll make sure I get it to you next Wednesday. But take a look at this. This encompasses basically Broward and Palm Beach County, so a broader scope of South Florida. On the bottom, I show inventory for the month of October rose over 3,600 units for a 13% increase. But look at the top of that where it talks about inventory rising. Well, at the end of July, the number was 27,500 units. Since then, it's up over 34,000, or a 25% increase in just over 3 months. So what is all this rising, and I'm talking about fast rising inventory, due to the average price in South Florida? Let's take a look at the next chart. This is the average sales price for Delray Beach. And as I mentioned last month, there's a seasonality correlation of how prices rise and fall throughout the year. Let's take a look at this and update it. So back in 2021, on the far left, you can see from August, September, October, prices went from $476 up to $538. Then in 2022, August was $510 and it rose up to $641,000. Now on the far right, you can see we've gone from August of $583 last month to $628. So we're still seeing the same correlation of August, September, October, which is what? Rain, hurricane months, but we're seeing that rise as we get closer to high season. And right now, high season is game on. So up to now, we got two charts of information. The first is rising inventory and also rising prices. Now, doesn't that not make sense? You would think that when inventory goes up, prices should normally soften, right? So this is what we call a market that is not behaving well. And you can take a look at the next one about days on market. Look at this. Of course, this is the 2.5-year view, but let's look at the far right. You can see that in August, it peaked at 57.5 days to sell the inventory in the marketplace. August was when we hit the low of inventory for 2023. Since then, days on market has crashed 25% to almost 45 days, at the same time when inventory has risen over 25%. So one is coming down 25%, the other is going up 25%. These should be going hand in hand. This is clearly a market that is not behaving well. What good is a monthly report without talking about interest rates? Have a look. As I mentioned last month, I said we would most likely see rates go above 8%, and they did. They topped out at 8.03%. But as I am publishing this video for you on the morning of November 3rd, take a look at this information. Hot off the press is the new updated Mortgage Daily News interest rates. You can see on the far right, rates have plummeted from below 7.95% now to 7.38% just this week. Bond traders are going crazy. We have a war in Israel and Gaza. We've got the war in Ukraine. Basically, the financial markets are very unstable at this time, and that will have a massive change on the affordability as we look forward to next month. Let's take a look at the affordability report. You can see here on the far right, last month it hit almost 63%. What does this mean? Anything above 50% in this chart says you're most likely not going to be able to get a loan. Why? Because this is the percentage of your income that is used to pay for your monthly mortgage. So as prices go up with interest rates going up, you're going to need more income to pay for that mortgage payment. And anything over 50%, a lender is going to say, you're not worthy of getting a loan. Now for a couple pieces of bonus material. The first one is about the Fed. This week they came out and said that they have no plans on lowering rates in the foreseeable future. And last month I said that would probably be the case, but maybe in Q1 or Q2 of next year, 2024, we might see some stabilization, or actually at that point rates going lower. Well, they said they're not going to go lower, but I wanted to share a piece of information. If you're not familiar with the podcast called All In Podcast, I'll put the link down below. They have a YouTube channel. If you haven't heard their podcast, I'll put the link down below as well. 4 smart dudes, mega millionaires and a couple billionaires from the Silicon Valley area, smart dudes, and they've been saying one thing for the last 6 months, which is anticipate rates being higher for a lot longer than most people think. They're talking about federal funds, of course, which is not correlated to mortgage rates. However, from an economic standpoint, people have been saying we're going to get in this recession. Well, we're probably already in a rolling recession. Last year, the stock market had a recession. This year, commercial real estate is having a recession. Residential real estate is not seeing any signs of a recession. Next year, we'll probably have some other sector of the economy that might go into a recession. So it's not one big recession, but it's a bunch of different parts of our economy that are going into a recession, which is why they say anticipate rates staying higher for a lot longer than you think. Now, for you homeowners and potential home sellers, listen closely. Last month in my How's the Market update for the month of September, I said at the 6-minute, 20-second mark that right now is the ultimate time for you to start preparing your house to sell in advance of high season. I was so committed to that I did another video that you can see up here or down below. I'll give you the link, titled Why November is the Best Month for You to Think About Selling Your Home. I'm committed to that. Take a look at that video. I have 5 amazing reasons why it's time to sell your house now in the big cycle of the real estate market. And if you take a look at what I just mentioned, how interest rates just crashed from the 8% down to 7.4%, now we're going to see a flood of more potential buyers and eyeballs looking at inventory. We have high season coming into the South Florida. We have rates coming down, and we have inventory on the rise. Right now, I'll say it again, is the ultimate time for you to be thinking about and preparing yourself to sell your home. If that is you, give me a call. My number's below. I would love to come out and meet you, give you a competitive price analysis or an equity review of your home and see what the valuation in today's market is for you. I would love to do that for you. We can get some coffee, however you want to meet. So call me. My phone information is down below. If you don't do that, please leave me some comments. Give me a thumbs up, not a thumbs down. And if you like this information and what I'm sharing with you, please share it with a friend. I can't wait to see what happens in the month of November with inventory going through the roof and now rates crashing. It's going to be one heck of a first month of the high season. I'll be back in 1 month to give you a full update of what happened in November.